One of the big stories of the week was President Trump's attempts to shut down the U.S. operations of two very large Chinese tech companies. We started the week with TikTok, and then as the week went on, we added WeChat to the list. We welcome now one of the shrewdest tech investors around. She's Cathie Wood, the founder, the CEO, and the Chief Investment Officer of ARK Investment Management. Welcome, Cathie. Always great to have you with us. What do you make of this? Is this simply a particular response to a particular circumstance, or are we really pursuing a policy of trying to build something of a wall when it comes to the internet between us and China?
Well, we're certainly trying to do that. The administration may say it is for national security reasons and privacy and so forth. We actually, on our brainstorm today, talked to a national security expert. He doesn't think that that TikTok represents a national security risk, but he does indeed say that from a privacy point of view, assume that the Chinese government knows everything about you if you sign on to TikTok, which I did recently, actually.
Do you like the videos, Cathie?
I like dancing videos, so yes, but I can see how people are addicted. I haven't picked it up because I know if I pick it up, I won't put it down.
So, Cathie, as you look at this, is there a little bit of turnabout as fair play going on? Because after all, China for years has blocked things like Facebook and Google from the United States. So are we doing anything to them that they haven't done to us already?
Yeah, that's true. Yes, I think that's true. I think what this suggests, however, is that to the extent Tencent, and the administration also went after Tencent today as well, at least verbally so far, and Alibaba want to expand from China, and they're getting to be so big within China that if they want to keep up their growth rates, which are north of 20–30%, on the top line, they need to spread their wings elsewhere. And perhaps this is one way of, as you say, this is playing war, of preventing some of those giants from infiltrating the rest of the world.
Could this also have some ramifications for other U.S. tech companies? Because as I read about it, the language that was proposed was so broad, it would suggest it could have hurt, for example, Apple putting these sorts of apps on their phones, even over in China, perhaps.
Yes, yes, this could be a war of sorts. It's been interesting to watch the back and forth for almost 2 years now with this administration. It's two steps forward towards, all-out war, and then one step back. So I don't think President Trump wants to risk this economic expansion or this recovery from the coronavirus crisis. And to be blocking China would be harmful. So I think he won't be full out in terms of war, but will continue to saber rattle. And I think it's partly because it's an election year, and he feels as though his fears have been borne out as we've seen the coronavirus escape China and so forth. So I think there's more about election year campaigning in this than many people understand.
As the week progressed, there was a fair amount of talk about the possibility of Microsoft buying either the U.S. operations of TikTok or even something larger than that. As an investor, as a tech investor who's been quite successful in this area, does it make sense to you? I mean, if you were a Microsoft investor, would you want them going back in the business to consumer business? They were in that before, didn't do so well. They've done terribly well to B2B with the cloud.
Yes, so their bread and butter is enterprise. Now, they do have Xbox. That has been very successful as a franchise. But as they've tried to get into the streaming gaming world by poaching Ninja from Twitch for $10 million and putting him on their mixer, they learned the hard way that you cannot import talent. You have to have the right DNA. And I think what they're going to do now, instead of building, they're trying to buy their way into a broader consumer franchise to balance their business perhaps a little bit more like Google's is.
So, Cathie, we can't have you on and not talk about Tesla, because you've been a big champion of Tesla. You've done very, very well with it, continues to do well. Give us a sense of how the pandemic may be changing transportation here. Obviously, people are more reluctant to go on mass transit. Is there an opportunity there for a company like Tesla?
Well, there certainly is, and we're hearing that Tesla, in fact, Elon Musk has said as much or hinted as much on recent earnings calls, that Tesla will start its own ride-hailing service to compete against Uber and Lyft. And the competitive advantage that Tesla will have here is it will go to the Uber and Lyft drivers who have been hurt badly in here and their incomes drained significantly. And we'll say to them, okay, if you put up 5,000, 7,000, whatever the number is, to buy this car, trade in your car, put them 5, 7,000, buy a Model 3, you can work the rest of it off. And we'll throw insurance in there as well because Tesla is going to self-insure. We know this is a good thing for drivers because the total cost of ownership of a Model 3 today is about 30% less than that of a Toyota Camry, especially when you include the trade-in value of cars. We believe the trade-in value of the Model 3 is actually going to go up because of this ride-hailing opportunity, and that anyone who signs on to this network, say a person does take Tesla up on its offer. They'll drive, let's say, 50 to 60% of the day, unlike you and I who drive maybe 4 or 5 times a day. Tesla will get that much more data to feed its AI engine and to move into the autonomous world. And then these drivers, they won't lose their jobs, which they would if they had stayed at Uber and Lyft.
Right.
They'll actually become entrepreneurs because they'll be able to send these autonomous cars out and earn money on them.
So briefly here at the end, Cathie, Uber's been struggling a bit lately. Does that make Tesla pause or does it double down because this is a perfect time?
Oh, I think this is a perfect time. And in doing so, what Tesla does is lower the probability of any bear case for Tesla because ride hailing is so much more profitable and it's a recurring revenue model compared to just selling cars. And it is a bridge to their autonomous taxi network. So I think they'll have a running start this way. It's going to be pretty exciting.